giving some problem. So all of you, are you carrying your book, IDT book? Okay, then please open page number 373. Join again, do you be? Join. Students, some college getting some problem. I know. Maybe. Okay, so shall we start? Shall we start with chapter number 6? So students, till now you have covered with, you have the basic idea of what is GST and how the GST is levied and collected by the government, and the government has laid the dual structure under the GST system. And what do you understand by the time, value or the place of supply? Because supply plays an important role under the GST, the new indirect tax regime. And what all the procedures for registration under GST. So today we are going to study about various documents that are required to be maintained under GST. The foremost important document is the tax invoice. So we will just study about what is the tax invoice, why it is required, when it is supposed to be raised, and what are the time limits for raising an invoice. So as we all know, like, okay, just give me a brief, what is the understanding of the GST to you all? What is important for levying a tax? That means a value, accessible value, like what material is to be supplied or services is to be supplied for levying the tax. Okay. Now, for everything, a document is required. Everything needs to be documented. Whatever transaction is being carried out, that needs to be documented. So that document is known as the invoice, where one gets the details about the transaction, that is the supplies, the nature of the supply, the nature of the goods, who is the supplier, who is the recipient, what is the value of the goods, and what is the GST, what is the tax levied on such supplies. So that is what we talk about. That's called a text invoice. A document called a text invoice. So as you can see, the under GST, the CGST Act 2017, Section 31 governs the provisions related to the text invoice. So, a text invoice, when it is raised by, as you all know, a person who can collect the GST, that is the tax, is the one who is registered under the GST Act. The registered person is authorized to collect the tax on behalf of the government and is liable to deposit the tax with the government. So any registered person, whether making or receiving supplies from unregistered person, then that registered person has to raise a tax invoice to document that transaction. Okay? So one point is clear that a registered person can raise the tax invoice. Whether I'm just asking you a question, whether unregistered person is can collect the tax or raise the tax invoice? Can an unregistered person? Yes, because he is not responsible to pay the tax to the government. So on the behalf of the unregistered supplier, the registered supplier, who's the recipient, who is taking the services, is required to raise the tax invoice and levy what all tax was collected from the unregistered person is deposited with the government. So there are few scenarios where a registered person is not liable to raise a invoice. What can be those scenarios? One is that if the registered person, the registered dealer is dealing into the exempted supply. You know what is the exempted supply? What exempted supply means? Yes, anyone can? What do you mean by exempted supply? You must have studied at the time of under the definition of the supplies. Yes, anyone please? Exempted supplies means when there is no GST leviable on certain goods. That is like there are certain essential items zero rated. Zero rated means again the rate is defined where the rate is zero. There are certain items that are clearly stated that no GST is levied on certain items. Those are the items that are termed as exempted items, and any registered person dealing in exempted supplies, in exempted goods, then no GST is levied on such items which aren't covered under GST. No, they are covered under GST. They are covered, they are very well covered under the law. Under the law only, it is defined that these items are exempted. Nil rated means zero rated. There are two things in the Act. When there are certain items which are given that yes, a rate of 5% or 12% or 18% or 28% is available. Similarly, it is stated that they are the zero rated. But clearly, there are certain basic essential items like milk is there, grocery like vegetables are there, there is no GST. So these are the exempted items. When a person dealing in the exempted items, they are not required to raise the tax invoice. So any person who is dealing into, although they are the registered person under the GST, but they are dealing into the exempted supplies, then they are not liable to raise the tax invoice. That means, yes, instead of zero rated, it means it's a nil rated. You can. They are exempted under the tax. Similarly, there are the composite, the people, the trade houses or the people who have registered as a composite dealer. Means registered under the composition scheme. You must have studied while under the topic of registration under GST. One of the type of registration is registration under the composition scheme. Any idea about the composition scheme? Anyone? Like, are they eligible to take input tax credit? Composition scheme, they are liable to, they are, no means that you have an understanding or you don't have understanding. Understand now? Yes. So, whether a person registered under the composition scheme is liable to raise a tax invoice, is that person? Mm, no, it is not. Because why it is? Why they are not liable to raise the tax invoice? Because the the dealers who are registered under the composition scheme, they are collecting the tax, the GST at a lower rate of tax. And as such, they are collecting and depositing the collected tax to the government. But whosoever is buying, they are not allowed to take input tax credit on such invoices. So a person registered under composition scheme is issuing a bill of supply and not a tax invoice. So a composite dealer, a person registered under composition scheme supplies, or you can say raises a bill of supply in lieu of tax invoice. Yes, no input tax credit is allowed. No input tax credit is allowed. Is it clear? Is it clear? Okay, thank you. Now, why a tax invoice is required? Why a tax invoice is required? Why we are writing everything, the description and charging the tax? Correct. Absolutely correct. Varun, you have given a correct reply. To claim the ITC. Under GST law, under the CGST Act 2017, it is clearly stated that a tax mandatory, that is the primary document to claim the input tax credit. If a person is not having the tax invoice, they cannot claim input tax credit. Okay, so this is the foremost reason that a tax invoice is an important document under GST. Now, there are certain small supplies as written in your page 373, that any supply which is less than rupees 200, okay, in that case, a supplier is not required to raise the tax invoice. But yes, if recipient wants, they can raise the tax invoice. And in case of the small transactions, every registered person is doing many small transactions during the day. So at the end of the day, they can just consolidate and raise. Because normally we are doing small transactions with the unregistered person. There are so many requirements into the trade for small things like you are buying stationery of a small quantity or some consumables which are required on urgent basis. So small invoices are raised and normally such purchases are being done to unregistered person. So a registered person who is taking supplies from an unregistered dealer, they at the end of the day consolidate all those transactions and raise one tax invoice claiming the tax into that, whatever tax is mentioned in that invoice, then registered supplier, the registered dealer deposits the tax with the government and again can claim the input tax credit against that, against all those transactions. So that sort of invoice is known as consolidated invoice. That is, a registered person is allowed to raise it on daily basis while dealing in day-to-day transactions. Clear the consolidated invoice? Okay, thanks a lot, students. Now we will just study like what is the timeline, the time limit within which a tax invoice should be issued by a registered person. Okay. So now there are there can be two situations. One is there can be supply of goods or there can be supply of services. Now, what is the timeline defined under law and which section is it is governed by? Section 31, subsection 1 of section 31 of CGST Act 2017 defines the time limit wherein which a registered person who is supplying the material is required to raise the invoice. Very nicely depicted in the note, this diagram. Are you all able to see in your book, in your note, on page number 373? Invoice in case of supply of goods, subsection 1 of section 31 of the CGST Act 2017. Great. Now, they say, as you must have been dealing in day-to-day procurement of any material, you might be going to market buying your dress, buying your any eatables. The moment you buy the material, an invoice is raised by the supplier. You are going to food court, you are going to shop, you are going to mall. So when the tax invoice is raised, if there is a movement of the goods, you are buying the food, immediately the food is delivered by the supplier. So the movement of the goods happen. You have gone to a garment shop, you bought one piece of garment. Moment you paid the price, the material is delivered to you. So when the supply involves movement of goods, then what is the timeline or time limit to raise the tax invoice? It is invoice issued before or at the time of removal of goods or supply to the recipient. Means as soon as the goods are moved, the invoice is raised. Even in the factories, even in the production manufacturing units, as and when the goods are moved, say direct, there can be either the supply is to some showroom or it can be directly to the customer. If the supply is directly from the manufacturing unit to the end user. Say, I'm just giving an example of a wristwatch dial manufacturing company. As soon as, say, Titan has placed an order for manufacturing of a dial, one of the suppliers is manufacturing the dial and supplying it to the Titan company. So, on the daily basis, there is a delivery of the dials to the Titan company. So, as and when the manufacturer of the dial releases or means pass those goods to be delivered to the Titan, an invoice is raised from the factory. So as and when, when the invoice is issued before or at the time of, as and when the goods are removed from the factory, the invoice is generated and goes along with the shipment. One of the copies is given to the transporter that goes along with the goods and is being delivered to the recipient. So this was the case when there is a movement of the goods. Now what is the time limit when there is no movement of the goods, when the supply does not involve any movement of the goods? It will happen, but it will happen at a later stage. So in that case, your clause B of subsection 1 of section 31 states that invoice should be issued before or at the time of delivery of the goods or while making goods available to the recipient. Means till the time goods are on the way, or if it is taking some time, during that time the invoice can be raised by the supplier to the recipient. Clear, students? Okay, thank you. Now, see, for the movement of the goods, for the supply of the goods, the timeline is defined under subsection 1 of section 31. Section 31 of CGST Act 2017 deals with the text invoice. Now, subsection 2 of section 31 of CGST Act 2017, along with Rule 47 of the CGST Act Rule 2017, defines the time limit for the raising of tax invoice in case of supply of services. Now, now move to please page number 374. Again a very good depiction of in this. Now, how they have just defined this? They have just captured like if there is any supply by a banking, NBFC or an insurer, then the time limit for raising the tax invoice is either before the supplies are made or within 45 days from the date of the supply of services. Say suppose I am a banking company, like there are so many banks in India, there are NBFC companies, there are insurance companies. Okay. Have you seen that insurance company, they are taking the payment, they are generating the policies, and they are releasing all the your insurance policy after receiving the payment. Okay. So that is the timeline that within 45 days from the date of the supply of services, they can raise the invoice. Okay. Say suppose today is the date. Today we are sitting on 14 days. So what will be the means 45 days after the 14th October, they are eligible to raise the tax invoice. Now, other than banking, NBFC or insurer, there can be any kind of supply. Then such supplier, what is the time limit defined under the Act? That they should again issue it before the supply or within 30 days from the date of supply of service. So it is very clear if it is in how you have to just memorize it. If it is a banking, NBFC or insurer, then the supplier can raise the invoice before or within 45 days of the supply of services. In rest of the cases, the invoice can be raised within 30 days after the supply of service. Clear? Clear? So in case of goods, at the time of removal of the goods, in case of services, there is a certain period given to the supplier, 45 days for banking, NBFC and insurer. Others, it is within 30 days from the date of the supply of service. Now, there is a big note below that flow chart. That note talks about distinct person under section 23. What is the understanding of distinct person? Can anyone please advise on that? What do you understand? Or what is the definition of distinct person? Yes, please. Anyone? Yes, separate registration in GST. Why? Different GST. Who takes different GST? What is the need of taking, why there is a need of taking separate registration under GST? Same person, yes. Same person means person having a single PAN but having presence in multiple states. Multiple means more than one state, to be very precise. So any person who is going for registration but having presence in more than one state, then under the same PAN of the company, for having presence in each and every state, they have to go for a separate registration. Then for such persons, like for every state, they are known as distinctible. Correct. Well stated, students. So now, what is the provision for distinct persons? Like, what is the time limit? Say we are having a company is having a branch in Haryana. They supplied certain goods to Rajasthan. Then the branch of Haryana, they are the supplier. What is the time limit by which they can raise the invoice? Because even if they are registered under the same PAN, they are treated as distinct person, and under GST, every state has to file their own GST return. So the timeline defined under the Act is, again, they are supplying the goods or services. It can be before the supplying of goods or services or when they are passing the entry in their books of account. Say suppose we are having a branch in Haryana and in Rajasthan. We supplied goods, say on 10th of October. Okay, we supplied. We have not raised the tax invoice. There was an urgency. We said, okay, fine, it's our own branch. We have supplied. But now today I am sitting. I just want to pass an entry. So what were the scenarios? I could have raised the invoice on 10th. But now I'm making the entry. I can raise the invoice on 14th. Because I'm making the entry, I want to make the entry in my books of account for supply of the material or services, or maximum what the law has allowed, that it should be made before the expiry of the quarter during which the supply was made. So for October, which quarter is applicable? October to December, the third quarter of the financial year, correct? So before 31st December, I can raise the tax invoice for the supplies made to a distinct person under the Clear? Distinct person under section 25 means section 25 only deals with the definition of the distinct person, not with the time limit of that raising the tax invoice. Clear? Clear, students? Any doubts? You can please ask. Yes, it can be raised in 30 days. It can be raised in 30 days. See, we are specifically talking about distinct person. Other than distinct person, you have to raise within 30 days. There, for being a distinct person, there is a liberty given under law that you can raise that invoice before the end of the quarter in which the transaction has happened. If it is not a distinct person, if the transaction is not related to a distinct person, then yes, you have to raise that invoice within 30 days. Clear? Okay, thank you. All others, please. You are getting your, the way I'm trying to explain, it's the first lecture, so by and by, some harmony will be developed between both of us, the students and the faculty. And you can please keep on raising your invoices and be interactive through the chats, or if anyone wants to, they can just unmute and raise their question if they want to discuss anything. They are unable to explain through chat box, we can just discuss by unmuting. But request you, please do one by one only. Okay, now, can we move ahead? Okay. So, what is the situation? Like, I'm just giving an example. I'm a supplier. I'm dealing into exempted goods also, but I'm also involved into supply of taxable products. So, can I raise a tax invoice or shall I raise a bill of supply? Yes, anyone? If a registered person is dealing both in exempted and taxable supplies, is that person Fixed supply for taxable supply, tax invoice. And yes, and for exempted, what we will do? To the same recipient, one of the recipient, they are asking for both material, exempted as well as flexible goods. Then what we will do? What law has suggested that in that scenario we can raise one invoice, because to the same recipient for two categories of products we are raising two invoices. Instead of that, we can simply raise one fixed invoice from bill of supply, where which can carry both your taxable product as well as exempt. So over the invoice, what is written? Normally, if any one of you is working, you can see in the company, you will see the word imprinted on that document called fixed invoice. So in place of fixed invoice, in such kind of transaction, you will see fixed invoice from bill of supply. In case of both, we will raise fixed invoice. No, the document will call fixed invoice from bill of supply. It will be fixed invoice from bill of supply. Okay, so there will be written invoice from bill of supply. This has been clarified under notification number 45 of 2020. Now, what are the contents that has to be there in the fixed invoice? What are the contents? Normally, what contents? Till now, since your childhood, you might be buying the goods and you must be seeing on the invoice, if you ever get a chance to see the invoice, that what all details on invoice normally are there. Yes, the GST number, it is very important under the GST. The GST number of both the supplier as well as the recipient of supply has to be mentioned. If it is an unregistered person and the supplies are more than 50,000, then if the recipient is unregistered and the supply is of more than 50,000, then the name, address, state, the PIN code is required to be mentioned on the invoice. So apart from the GST number, the name of the supplier and the recipient, the details covered are the description of the goods, the accessible value, the HSN code. What is the importance of HSN code under GST? Anyone can tell me what is the importance of HSN code? Why it is required to be stated on the tax invoice? Anyone can please, what is the understanding of HSN? You must have studied earlier about this in the previous chapter. Rate of tax is determined by HSN code. Correct, Varun. I request others also to please answer. No, even if Varun has answered or anyone else or two or three students have answered, you still can answer. Everyone has the right to express their views. Yes, because GST has used the earlier before this GST, you must have studied that excise has also subsumed under the GST. So earlier the excise duty was imposed based on the HSN. This is harmonized system that defines a certain category of the goods under various headings, and the rate of duties were defined based on those headings. So the GST has also taken those chapter headings and those codes, and based on those codes categorized various products that yes, these category of products are eligible for this rate of tax. That is why HSN code has been made mandatory to be mentioned on the tax invoice. It is the 10-digit code. So for the small dealers, for certain products, they have said, okay, first four characters will be okay. Somewhere they have stated that yes, six characters are required to be mentioned on the invoice. And somewhere they have said no, all the 8 or 10 characters are required to be given on the tax invoice. Normally, we have seen the first four characters on the invoices will be paid. So if you see the HSN code, the first four characters you will find. If you search it on a Google or check the chapter headings, you will find that yes, this character, this code relates to this particular product, and that is why this rate of tax is applicable. So your HSN code defines or helps in identifying the rate of GST that is applicable for a particular product. Correct? Clear? So that is why HSN code is required on the tax invoice. So if I just go one by one, what all are the contents that has been mentioned in the notes on page number 374? Shall I go for a quick reading, like what all points are given there? Shall I go? Okay. So the first is name, address, GSTN number, as well stated by Varun and others. Now, date of issue of that invoice. Why the date is important? Why the date is important? Okay, because under the law we have stated, just studied that yes, what is the timeline of issuing that invoice. So whenever the supply has happened within 30 days or for 45 days, or when there is a movement of the good, so that is the moment when GST will be charged, because as you have studied that there is a time when a GST is chargeable. There is a time when the GST is chargeable. That time is defined as and when the time the supply has happened, GST becomes chargeable. So when that time of supply has happened, that is clearly indicated by the tax invoice. That is why date of issue of invoice is also important on the tax invoice. So one should mention the repeat page number. It is 374 of your paper 11 book, indirect tax, IDT. 374. Yes, correct, Varun. Page number 374. Contents of tax invoice. Is it clear, Harshita? In old book, it is 294. Okay. I'm sorry, Harshita. I'm carrying the new one where on 374 it is clearly stated. Okay. So I'm just moving ahead. So the name, address, GST and number of the supplier has to be there. The consecutive serial number. Serial number is very important. And at the beginning of the year, the registered dealers even has to give on the portal that this is the invoice series number that they are going to use during this year. And invoice series is like um, it is a number of digits, maybe alpha, numeric, certain special characters, slash, like. I am saying that my number of transactions in this year can be volume, let's say 10,000. So I'll just start with a series of 5 digits, say 0001 slash 202021. Likewise, we can just uh, create our invoice series, and it should be a printed document on which we can just mention all the contents that are required under the law. So, a consecutive serial number is required. If any invoice has been cancelled, it should be properly cancelled and should be remain intact with your invoice book. Okay, and then the name, address, and GSTIN or UIN is registered of the recipient. The person to whom we are supplying the goods is also the name, address, and GSTIN is required. Okay, now the name, address of the recipient and the address of delivery along with the name of state and port if such recipient is unregistered and where the value of taxable supply is 50,000 rupees or more. Just now I explained this, that if the value of the supply, the taxable supply is more than 50,000, then the supplier is mandatory and that supply is made to the unregistered person, then this the name, address, state and PIN code, state PIN code is required to be stated. What in case if the taxable supply is less than 50,000 and is made to the unregistered person? Then what? then it is not mandatory to mention, but yes, if recipient asks that yes, my name and address, everything should be stated, then supplier must state even if the taxable supply to that unregistered person is less than 50. Here, then is the HSN code of goods and accounting code of services. For goods, what we are using? We are using the HSN code, and for services, there is an SSC code. Those are known as the accounting code, SSC code. Service accounting codes are assigned for the services. That should be mentioned. In case of service, SSC code should be mentioned. In case of goods, HSN code should be mentioned. Description of goods. What is the type of material or what is the description of the services you are supplying should be clearly stated. Quantity in case of goods and the unit or unique quantity code therein. Like you have registered with the institute, you must have got your registration number. In colleges, you must be having your roll numbers, or in schools also. So in big organization where you are dealing with the multiple products, you are going to a mall, you will see that along with the price tag, there's some code is written over there. That is the product code. So in big organizations, it's always better to define a product with identify a product with the code. It is easy to maintain the systems and to identify the product. So that material code, the name of the material, the description of the material, and the quantity should be mentioned on the invoice. Then the total value of the supply. How will you get the total value of the supply? What is the rate per unit of that supply? What is the total quantity that we are supplying? If we multiply these two numbers, we will get the total value of supply of goods or services or both. An invoice can carry both a good or a services. Earlier, like in case of contracts, construction contracts, or like there is a supply of material also, and there is a services also we are providing, like installation of certain things, you are taking the spare parts also and installing also. So there is a supply of material as well as there is a services, installation services a person is or a dealer is providing. So an invoice can comprise of both. Now then the rate of the text. Now rate of the text. Here they have stated in the K point. Central text, state text, integrated text, union territory text or text. Now please tell me when an invoice should carry CST and SCST, when it should carry IGST and when it should carry UTGST. Anyone can please tell me, like, when it is required. Suppose we have purchased any goods. Intra means what, Varun? Intra means what? Other also, please share your opinion. Then only the class will be more interactive. Intra means what, Varun, Harshita? Interstate, yes. Intrastate, it will be intra CGST, SGST, interstate IGST. Correct. And when the UTGST? When the UTGST is applicable? When you have to state on the invoice? Yes. When a transaction happens within the union territory. That means there are states, there are union territories. In CGST, SGST comes when there is a transaction, when a transaction happens within a state, intrastate. So when there we, how the 50-50 ratio we bifurcate between CGST and SGST. So a transaction when happens within union territory, what are the two things? How the tax is placed on the invoice? 50% component goes to the CGST, 50% retains in the UTG. Correct? Clear? And yes, interstate transactions always attract IT. Clear, students? Yes. Thank you so much. Okay. Now, the amount of tax charged in respect of taxable goods or services. One, from the HSN code, you come to know about the tax rate. Whatever accessible value is there on the invoice, you just apply that rate, and that is required to be mentioned on your tax invoice. That is the amount of tax charge. Place of supply along with the name of state in case of supply in the course of the interstate trade of commerce. Definitely the place of supply is required along with the name of the state. Means if it is an intrastate, so it is clear. CGST, SGST means the state is same. Whereas ITST is mentioned on the tax invoice, yes, definitely the place of supply is required to be mentioned on the tax invoice. The address of delivery, that is the place of supply, is very important under GST because that only identifies that yes, the tax will, which state is going to receive that tax. That is why, because IGST, if there is an intrastate transaction, how the central government will come to know that this transaction has happened to which state? The 50% amount will go to which state? That is why the name of the state, the place of the delivery in case of the interstate supply is required to be mentioned on the tax invoice. Clear, students? This point is clear? Okay. So next is, yes, thank you, Shankar Dal. Thank you. Thank you, Harshita. Next is address of delivery where the same is different from the place of supply. Address of delivery where the same is different from the place of supply. At times, the place of billing and place of shipment are different. Like, I am the recipient of goods. I am sitting at corporate office, but my factory is placed in Rajasthan and my corporate office is in Haryana. So I say it can be different state also or it can be within state also. I am having corporate office at one address in Haryana, but my factory is located within Haryana at a different state. So I am giving that recipient, the place of supply will be this, but the place of delivery, the place of supply will be can be at the corporate office, but the delivery will happen at my factory location. So the place of delivery there is required to be mentioned on the tax invoice where it is different from the place of supply. Yeah, whether the tax is payable on reverse charge basis. What do you understand by reverse charge basis? You must have studied in your earlier chapters. What is reverse charge basis or reverse charge mechanism? RCM. You must have studied. Yes, recipient pay tax. Because why recipient pays tax? Because you are procuring that material from the unregistered person, the person who has not registered under GST. So on the behalf of that person, the registered recipient raises an invoice, a tax invoice, and whatever tax is stated in that invoice is paid by that person. So that the tax charge on that invoice by the recipient is paid to the government, he is liable to pay, and he can claim the input tax credit of the scheme, the tax charge under R. Okay, thanks Harshita. Whether, अच्छा ठीक है ये हो गया. Now signature or digital signature of the supplier or his authorized representative. Every invoice is required to be signed. Now, if it is a digitally raised invoice, electronic ticketing, if there is a, as and the notifications recently in 2019, later in this chapter explained, if there is a electronically raised invoice, digital ticketing is there, under that an invoice is raised, then no physical signatures or digital signatures are required in that case. Otherwise, a text invoice is required to be signed. Okay, but just to claim, later in this chapter you will come and you will have an understanding that yes, any field which is not impacting, like if the rate of tax is given, if HSN code is given, if the detail of the material is given, unit rate is given, the quantity is given, the name of the supplier is given, place of supply is given, and few of the detail GSTN number is given, and few of the minor details are because of clerical error if something has been missed out to mention. But for the all the information that is required for charging the tax is there placed on the tax invoice, then the recipient can claim the ITC. We cannot just stop from claiming the ITC that this information is not mentioned or that is not mentioned, because those errors can happen because of clerical, but all the information that is required for computing the GST should be there on the tax invoice, then that person can claim the ITC. Then the recipient can claim the ITC. The intent is just not because of clerical errors, the recipient should not be deprived of his right of claiming the ITC. The intent of law is that. So later on the page number 375, if we just see just below the content, they have given a clarification about when the signatures, manual signatures or digital signatures are not mandatory. Where electronic tax invoice has been raised, electronic bill of supply is raised, electronic consolidated tax invoices in case of banking companies, etc. Consolidated is not limited to banking companies. It can be raised by any registered person who is having a good number of small transactions from unregistered persons. Then electronic ticket for passenger transportation service. A good example is like you are carrying the smart card for traveling into metro. Every time you travel into metro, you are carrying the card. Is metro raising any invoice to you? No. You're getting what I'm trying to say? So that is a good example, that electronic ticket for passengers transportation service. Automatically the card is swiped, transaction happens to every passenger, they are not raising the fine or any ticket, something like that. Now we have seen the provisions related to tax invoice, what is the time limit and what are the content has to be there on the tax invoice. Similarly, there are certain provisions that are dealt with bill of supply. So a bill of supply, when a bill of supply, what is the difference between tax invoice and a bill of supply? Wherever the tax is not charged, in that case, a registered dealer is raising bill of supply. Like example we studied in the case of the exempted goods or the composite dealer. So since the amount of tax is not there, okay, so they are raising the bill of supply. Very nice definition. A bill of supply is similar to a GST invoice, except that bill of supply does not contain any tax amount, as the seller cannot charge GST to the buyer. That is why composite scheme में क्या होता है, they at a lower rate of say 1% on the total turnover, they just pay the tax. That is why no ITC. In the beginning, someone has asked me, a recipient cannot claim ITC. Yes, when it has not been charged, no one can claim ITC. So, a bill of supply is issued in cases where tax cannot be charged. Again, those two examples, the exempted goods and the person who has opted for composition. Clear? Clear, students? So, when a bill of supply is raised, only in two situations where the exempted goods are supplied and where a person has opted for a composition scheme, because no tax is charged from the buyer. Thank you, Archana, for confirming. Thank you, Harshita. Thank you, Varun. So now, what are the content? Okay, in the small box, they have just written, as per notification number 45 of 2017, Central Text dated 13th October, if a registered person is supplying taxable as well as exempted goods, public services to an unregistered person, then he can issue a single invoice from bill of supply for all supplies. This is what we have just discussed again, a scenario where both items are there in a single document, single invoice. Now, what are the contents of bill of supply that is required under law? Means the Act has not stated that this is information is mandatory, but on a like that, yes, these things are required to charge the GST. On that basis, that this information, that why this rate has been charged, why this rate has, the GST amount has been arrived, how it has been arrived. So what all important contents are required to derive such things should be there on invoice. So nothing mandatory or specific draft has been given by the Act. What about unregistered person? Can he issue bill of supply? See, unregistered person, he is not obliged to follow any of the provisions given under GST because he is not registered. As soon as a person gets registered themselves under GST, then only the law becomes applicable. And when a person becomes liable under GST, once they comply with the threshold limits given under GST. At any point of the time during the year, your turnover breaches the threshold limit defined under the GST law, then that person becomes liable to get registered under the Act. So, till the time they were unregistered, they remain unregistered. They are not liable to follow any of the provisions of the Act. So, they can simply issue an invoice. What about unregistered person? Can he issue bill of supply? He will just raise an invoice. Will not use the term bill of supply or anything, just raise an invoice. What documents can he issue for keeping his record? What document can he issue for the unregistered supplier? See, normally unregistered suppliers, uh, if you see other tax laws or everything, although they are increasing, keep on increasing the threshold limit. So they simply maintain the invoice. They simply maintain their cash book to reconcile the thing. Because they are not liable to collect the tax, they are not liable to pay the tax, they are not liable to charge the GST. So they can simply raise a document stating that yes, this is the name of my firm, this is my contact details, my address. Supplier, at times you have seen small shops, they are simply asking your name, or at times your contact details. They just having a invoice number and they just give the item details, the amount. If there is any advance paid, they deduct the advance, make a total, and they just give you. If you ask, okay, what is the delivery date, or if it is to be delivered later or at the same moment, then they just give you that invoice. Harshita, invoice come bill of supply. No, they just raises an invoice. They just keep for their record that this is the thing they have supplied for their accounting. They're under GST, they're not liable to raise invoice from bill of supply. Clear? Okay, anyone having any other doubts regarding this matter? Okay, so we'll just move on. Okay, thank you. We'll just move on to the contents of the bill of supply. It is more or less the same. Nothing has been mandatory defined in the law. So, again here, the name, address, and GSTN of supplier is required to be mentioned. Serial, consecutive serial number has to be given over there. Date of issue of bill of supply is required. Name and address of GSTN or UN if registered of the recipient. HSN code of the goods or accounting code for services. Description of goods or services or both should be given. And value of supply of goods, services or both taking into account discount or abatement if any should be given. Means GST should not be charged on the discount amount. If you are having a amount of 10 on which you are giving a discount of 5%, So the taxable value will be 95. Correct? And so discount should be ignored in that. If it is there before at the time of supplying the material, the discount is determined that moment, then that discount should be stated over there. And in any case in the account, bulk discounts are not recorded and that discount, bulk discount will not appear on the invoice. Okay. Then the description, HSN code, value of supply, signature or digital signature of the supplier or his authorized representative. So see, while going through the contents of the bill of supply, we have not seen any detail, any requirement related to tax. That what should be the rate of tax, what is the amount of tax charge, which we could have read, in the contents of tax. Okay. Now, a thing has come, manner of issuing invoice. This you have studied earlier also, like whenever we were, and earlier tax regimes also, whenever a tax invoice, whenever an invoice or tax invoice is being raised, always 3 copies are raised in case when the goods are being supplied and 2 copies are raised in case of supply of services. Why 3 in case of goods and why 2 in case of services? Because you need a transporter to supply the goods. Whereas in case of services, there is no need of transporter as because supplier himself they are giving the services to the recipient. So normally in case of goods, 3 copies are raised. One is for the original is always meant for the recipient. Second copy is meant for the transporter, and the third copy, the duplicate copy, is retained by the supplier to keep a track that yes, they have supplied for their internal audit and internal representation. And in case of supply of services, only 2 copies. Original is given to the recipient and duplicate is for the supplier for their own record. And this is the point that serial number of invoices issued during a tax period shall be furnished electronically to the common portal in form GSTR1. GSTR1 is a return where all the outward supplies made by a registered dealer are stated over there, and hence the liability is determined that yes, in this month, these are the supplies we have made, and this is the tax outcome of that, and hence by stating that information, we have to mention the invoice number, the taxable invoice number, that against this invoice number, we have supplied material to so and so recipient of this value, taxes. This is all about ACR raised on monthly basis. Okay, now, what is the scenarios or the understanding of revised invoice? Revised invoice. See, earlier we used to raise a duplicate invoice or something, or such things are not there in this. There is only one scenario when we can raise the revised invoice. What is that scenario? Just now I have just given an example that we have just started a business. During this year, we expected that we will make a turnover say around 30 lakhs or something. We didn't say that we should get registered since we are within the threshold limit defined under the GST law. But as soon as we crosses that threshold limit, a person becomes liable to get himself or themselves registered under GST law. But the businesses keep on going. You keep on supplying the goods or services, and you are raising the invoice. But you have become during the year become liable to get registered. So it is not that the moment you become liable to get registered, immediately you will get the registration. During the registration topic, you must have studied that what is the minimum time frame? What is the minimum time frame by which you get the registration? What is the minimum time frame? Yes, anyone? What is the minimum time frame? Within 7 days? Harshita, 30 days. 30 days, yes, you can raise that revised invoice once you get the registration. By the auto, by in the auto process, I think so it is 7 days. In the 7 days, if they are not confirming you back that the registration should go on, that they are confirming the registration, it is a few more to presume that yes, any query is not raised by the authorities, the dealer gets registered, they get the certificate of registration. And so the time period when they become due for registration and the date when they get the certificate of registration. During that period, what all invoices has been raised by the dealer, law authorizes the dealer to revise all those invoices and raise against those invoices a revised invoice under the head X invoice, wherein they will simply state GST. They will simply state that yes, this to this item, this rate of GST is applicable and this is the amount of GST, and they are liable to collect that GST amount from the recipient and deposit it to the firm. That should happen. Such invoices should be get revised within 30 days from the date of receipt of the registration certificate under the GST. So there is one date that is the due date of registration under GST. One is the date of receipt of date of registration or the date when you get registered under GST. The date of certificate of registration, you can say. Here, so under GST, in that scenario only, a dealer can raise a revised invoice. Clear, students, this scenario, apart from Varun? If anyone is having any doubts, please come up. Yes, please, others. Yes, Harshita. Yes, Harshita. Automatically, it was 7 days only. It was 7 days only. There is a system of auto approval, auto registration under GST. So let's move to the next point, that is the receipt voucher, refund vouchers, and the payment vouchers. Shall I move ahead? Okay, so there are various payment vouchers in case the supplier buys the material and against that they receive a certain advance money from the recipient of the services. Then in that case, supplier is supposed to raise an advance voucher, okay, and should keep in record. In case in future, if the supplier unable to supply the material against that advance, so in that case, the supplier can raise a refund voucher which clearly states that what all payments they have received against the material, giving a reference of the advance payment voucher, they can reach the refund voucher. And all the details are to be required to be mentioned as per Rule 51 of the CGST Rule 2017. Then there is a receipt voucher that is on receipt of advance payment, as I just told you, which normally whenever there is an advance payment is received, it is not clear that whether the transaction is going to be interstate or intrastate. Although in the practical scenario, you know the party you are dealing with and you are aware of that they are stating. Hello, hello, okay, okay. So whenever, so normally, yes, we were discussing about the advance voucher. In case of the advance payment, the receipt voucher is being issued. Normally, during the time of advance we receive, we don't know whether it is going to be interstate or what type of material it is going to be. So normally, what law describes is, in the absence of that information, we normally charge the GST on advances at the rate of 18%. Supposing that it is going to be the interstate supply, so we charge IGST. We charge IGST and we charge the GST at the rate of 18%. Suppose we receive certain advance today. Okay, so and we have not supplied. The supply of services or the supply of goods happen in the next month. So while depositing the check for this month, we will charge 18% of GST, IGST on that advance amount. So normally this is one amendment came in the month of November 2017 that it should be leviable only in case of services and not in case of the goods. If you are into supply of goods and any advance is been received by the supplier of the services, then no GST is payable on that advance. Only in case of services, if any advance has been received in case of services, then GST should be taken on that. Clear? So now we'll just come to similarly, when a registered person is creating a text invoice and making a payment to the unregistered person under RCM, they are, whenever they make the payment to the unregistered person, registered person requires to raise the payment voucher also. And these are the records or documents that are required to be maintained under GST. That means what all records you are required to maintain, apart from the inventory related records, it is the tax invoice, it is the bill of supply wherever applicable, it is the advance payment voucher, receipt voucher, it is the refund voucher and the tax invoices and the payment voucher when a registered person is dealing with the unregistered person. Clear, students? Okay. And Now the continuous supply of goods. What do you mean by the continuous supply of the goods? They are talking about like what is the time limit of raising the tax invoice if there is a continuous supply of goods. When you say that there is a continuous supply of goods, that means repeatedly you are making a supply in one shipment, your consignment, your in a one single shipment, your entire transaction does not get closed. There is a repeated flow of the goods. So how they have defined another F, where successive statement of account or successive payments are being involved. Where successive statement of account and successive payments are involved, in that case, the supply is termed as a continuous supply of goods. And in that scenario, when the invoice should be raised, in such scenarios, the invoice should be raised. There are three possible situations, like it can be contractual based. You know when the date of contract is going to be closed, or if the contract can be closed well in advance, means before the due date of closure of the contract, which has been defined in the document, which has been documented. If the contract closes before that date, or at given date the contract date closes, or there are due date of payments that are defined under the contract. So basis that the invoices are being raised. So the subsection 5 of section 31 of the CGST Act 2017 states that where the due date of payment is ascertained from the contract, the invoice shall be issued on or before the due date of the payment. So in case of continuous supply of payment, if the due date is mentioned into the contract, invoice should be raised before or by the due date of the payment. Where the due date of the payment is not ascertainable from the contract, then when the invoice should be issued, it should be issued before or at the time of when the supplier of services receives the payment. Then means it is open. When the supplier receives the payment, on or before that date, the supplier of services of the continuous supply of goods then pays the invoice. Now, where the payment is linked to the completion of the event, the invoice shall be raised on or before the date of the completion of that event. Where the event gets completed before its time, then the invoice should be raised by that time. By the time the contract has got completed, and if the contract has got completed or in between or a partial supply has been made, so then the invoice should be raised to the extent or to the value of the supplies that has been made, not at the full contract price. That has actually executed to the extent the transaction has actually executed, to that extent only the invoice should be paid. Here, students, the timeline for raising the invoice in case of continuous supply of goods. It is purely based on the date of the payment, or if the payment is defined by the closure of the event, then at the time of the closure of the event. Okay. Now, supply of services. Now, goods being spent or taken on approval or sale or retail basis. There are at times, many times you must have also taken goods that we are just taking it, and if it gets approved back at home, then we will take it, otherwise we will return it back. Or nowadays, when you are procuring online, there is a return policy given by the vendors like Amazon, Flipkart. You will be seeing that there are the returns. So they send on supply or supply for approval, means it is approval for sale or return basis. So subsection 7 of section 31 of the CGST Act 2017 deals with that scenario where the goods are sent on approval basis, sale or return basis. So in that case, what they are saying is that notwithstanding anything contained in subsection 1, what we have studied in subsection 1, Subsection 1 of section 31 deals with what? Subsection 1 of section 31 deals with what? It deals with the supply of goods. Subsection 2 of section 31 deals with the supply of services. Correct, students? Hello? Am I audible? Am I audible? Oh, okay. Now is it clear, the voice? Okay. Okay, thanks Varun, thanks Harshita. Thank you. So we were just discussing what is when the invoice is raised in case the goods are sent on approval for sale or return basis. So they are stating like subsection 7 of section 31 deals with this scenario, and they are saying that notwithstanding anything contained in subsection 1, what we have studied in subsection 1 of section 31, that deals with the raising of text invoice, the time limit for raising the text invoice in case of supply of goods. So they are saying notwithstanding anything of the provision that is contained in subsection 1 of section 31, where the goods being sent or taken on approval for sale or return are removed before the supply takes place, the invoice shall be issued before or at the time of supply or 6 months from the date of removal, whichever is earliest. So there are three scenarios. One is when the goods are removed, for approval on sale or return basis, that is the time when you can raise the invoice, or under the law they have given a 6 month time period from the date of the removal, because at times normally in a practical scenario maximum supply allows a 1 month time, but under law they have given 6 months time from the date of the removal of the goods, but added whichever is earlier. By that time, the tax invoice should be raised in case where the goods are sent on taken on approval for sale or return. Okay, so and for this scenario, the tax invoice also includes the revised invoice. That means revised invoice is clear now that yes, during the year a person becomes eligible for registration under the tax. So till the date they get the certificate of registration, during that period what all invoices are raised, now the registered dealer can revise. So this clause also applicable to the revised invoice. That means revised invoice can also be, the invoice can also be raised in the form of revised within a 6 month period. Considering that earlier clause, also the provision of whichever is earlier, the time of date of removal or the 6 months from the date of. Now they have covered facility of electronic payment to recipients. Means with effect from 1st August 2019, as per section 31A, the CGST, the government, on the recommendation of the council, prescribed a class of registered person who shall provide prescribed mode of electronic payment to the recipient of supplies of goods or services or both made by him, and give option to such recipient to make payment accordingly in such manner and subject to such condition and restrictions as accepted. It simply means that yes, the payment can be made electronically to the specified group of to the specified manner, to the specified transaction in a specified manner, and in a specified recipient, that they can make the payment in the electronic form. Similarly, with effect from 1st September 2019, electronic ticketing has been allowed in the multiplex screens. See, you go to cinema hall. Earlier, we were getting a confirmation message that yes, tickets have been booked. Now they have been raising the invoice electronically, and that electronically raised invoice has its sanctity, and that equally serves the purpose of a manual text invoice. So the multiplex screens, they are allowed to raise the ticket electronically. Similarly, the single screen, the means the cinematographic filmmakers who are having the single screen theaters, they can also avail this option, and by following all the procedures that has been defined in the CGST Act for the multiplex screen. Now, after studying in detail about the fixed invoices, the other two documents that are required are credit notes and debit notes that are indirectly related to the fixed invoices. There are certain scenarios where we need the credit invoice and debit invoice because it's not that. Hello? 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 Am I audible now? The voice is clear now? Okay. Okay, thank you for confirming. There are certain, see in GST, we cannot simply say there is an invoice number 001. We cannot simply cancel, we cannot do, we have issued that invoice and we cannot just revise that invoice, making certain changes in that invoice. What GST law has stated that, yes, if there are any changes in the value of supply or something, that can be raised to the debit note or credit note. Say suppose there are scenarios like if the recipient of services has has returned the goods or they found certain deficiencies in the services. They say, okay, no way, you have supplied only to a 70% extent of total services. You have not supplied 100% of services. So we are like would like to make the payment of the services we have received. So they will make the payment of 70% of the total invoice. So in that case, the adjustment will happen. Now that adjustment will happen through a credit note or debit note. That other person will raise the credit note. We have raised the invoice and that other person will raise a credit note. Okay, that will be accepted by us and that will be a debit note for us. So wherever the transaction value gets reduced, it is adjusted by the debit by way of debit note or credit note. See, the sections governing the credit note is subsection 1 and 2 of section 34. 33 was dealing with the tax invoice. Now, credit and debit notes are dealt under section 34 of the CGST Act, where credit note about credit note it states that in cases where tax invoice has been issued for the supply and subsequently it is found that the value or tax charge in that invoice is more than what is actually payable or chargeable, or where the recipient has returned the goods, the supplier can issue a credit note to the recipient. Here, when we are 2 seconds, break hoti hai voice in 2 minutes. Okay, so Harshita, am I clear? Like we were just discussing about credit note. I just stated that it is dealt under section 34. Whenever there is a change in the value of the supply or in the change in the rate of tax or in the value of the tax or the recipient has returned the goods, then supplier raises a credit note. Is it clear, Harshita? I don't know why it is breaking after for 2 seconds. The voice is breaking in 2 minutes. If possible, try to use another microphone in next class. Okay, Varun. I'm taking a note of that. I am using a high fiber network connection. I don't know, still the voice is breaking. But I'll try to use another microphone in the next class. I'll keep it arranged in the next class. No problem, Varun. Thanks for your feedback. So we were discussing, am I audible now? Am I audible? Okay. So continuing on the credit note, we'll just take a few more minutes. We'll just go through and complete about credit note. Similarly, there are the provisions of the debit note, and with that, this chapter gets complete. Okay. So under the GST law, there is no provision that because of certain changes in the invoice, the accessible value or the tax rate, you can just revise that invoice. No. The invoice, the changes can be made only by way of credit note or debit note. And there has to be reasons for making those changes. So if once you have made the supplies, you have raised the tax invoice, later on there are situations that by mistake you charge a higher rate of tax. And once the recipient receives, they communicated that no, you have charged a wrong rate of GST. It should be 18% instead of 28%. Then you have charged tax at higher rate. The value of the invoice get increased. So in that case, how that adjustment will happen? That will happen to a credit note. For the excess value, a credit note will be raised by the supplier in favor of the recipient, and adjusting that credit note, the recipient will make the balance payment. This is how the adjustments are made to the main tax invoice. Clear about the credit note, the provisions, the reasons, and when a credit note can be raised. Now, there has been an amendment. Earlier, when the GST law came applicable on 1st July 2017, that for every invoice, individual credit note is required to be raised. If there is a situation that you need to make an adjustment related to because you have charged higher due to any reason, and a credit note is required to be raised, then for every invoice, a credit note was supposed to be raised. Now, with the amendment in the CGST law, under section 1 of section 34, for the couple of invoices together, one credit note can be raised for multiple invoices. There is no need to raise a single credit note for each and every invoice. Here, okay. Now there is one more provision just above this box. If you can just read it. The tax liability of the registered person will be adjusted in accordance with the credit note issued. However, no reduction in output tax liability of the supplier shall be permitted if the incidence of tax or interest on such supplies has been passed on to any other party. That means if the complete benefit you have charged certain tax, recipient has also claimed the ITC with respect to that. Means if I wrongly charge GST at the rate of 20% and the recipient has also claimed ITC at the rate of 28%, has not raised the voice, then no revision is acceptable because the third party has claimed the benefit on that. Clear on that part? So once the tax incidence has been passed on to the other person, there are no changes can be made, the liability cannot be reduced, the supplier has collected that much tax and they are liable to deposit that amount of tax to the from. Here, similarly, the provisions are related in case to the debit note. Just reverse of that is related to the debit note. Clear? So shall I give a reading to the debit note or just the reverse of this is applicable? What we have studied in case of credit note. Because a credit note raised by a supplier will become the debit note, and if a certain scenario comes where the supplier has not raised but recipient wants to raise at their end, they will raise a debit note in this scenario. Okay. Means if we just take the transaction from the supplier perspective, if the supplier has charged in excess in the invoice, the supplier will raise a credit note. Similarly, if the supplier has charged less due to certain reason, the values quoted in the invoice are on lower side than the actual value of the supply, then in that case, the supplier will raise the debit note. Correct? Correct? If I see from the supplier's point of view. Now, what should be the contents of the credit note or the debit note? The word revised notice, revised invoice, wherever applicable, indicated prominently. That means wherever any credit or debit note has been raised related to the revised invoice, it should be prominently or predominantly indicated over the credit or debit note. There has to be the name and address and GSTN of supplier. The nature of document, yes. In earlier text returns also, it should be clearly stated if the particular document is a credit note or a debit note. There has to be a consecutive serial number. There has to be date of issue of the document, let it be credit note or it be debit note. And there has to be the name and address. As we have discussed in case of the tax invoices, if we are dealing with the unregistered person, then the name, address, state and the state code required to be mentioned over there. The serial number and date of the corresponding tax invoice, as the case may be, in reference to the bill of supply. The value of taxable supplies in case of the means if that credit note is related to the tax invoice, then the value of taxable supply and the rate of tax and the amount of that tax that you are going to reverse should be clearly stated, and the signature or the digital signature of the supplier or the authorized representative should be mentioned over there. See, there is a notification number 39/2018. That's what I have explained in the earlier lecture, in the earlier hours of today's lecture, that yes, what all information that is mandatory required, what is like giving an understanding that yes, this is the rate of tax and this is the amount of tax, that all such content is available on the tax invoice. Then mere for clerical mistakes, claim of ITC cannot be denied to the recipient. Clear? Okay. Okay, so there is one more notification, that is this. Uh, as per notification 39/2018, which is dated 4th September 2018, with regards to transport of goods without the tax invoice, as laid down in Rule 55. The same procedure of transport of goods through delivery challans as applicable on transportation of goods in a semi-knockdown or completely knockdown condition shall also apply to the transportation of goods in batches or lots. Means when there is a knockdown condition or anything happens, the movement of the goods happen in tranches. So similarly, when there is a supply of the goods in batches or in lots, that means there is multiple delivery of one consignment. Then of the complete, like there is like multiple batches, the shipment will happen in multiple batches or lots. Then how the supplier should issue the invoices? Then in that case, the supplier shall issue the complete invoice before dispatch of the first consignment. The supplier shall issue a delivery challan for each of the subsequent consignments giving references. That means with the first consignment, with the very first consignment, the supplier should raise the invoice, and for the subsequent dispatches of the shipments of the batches and the lots, they can send over the challan. Okay, and each consignment shall be accompanied by copy of the corresponding delivery challan along with the duly certified copy of the invoice. That means the invoice that was raised along with the first shipment should be a copy of that invoice should be accompanied with the following consignment, and the original copy of the invoice shall be sent along with the last consignment. The original copy of the shipment of the entire, when the entire your transaction gets complete, the final shipment is going, then the supplier is supposed to send the original invoice copy to the recipient, because the original copy belongs to the recipient only. So in case of the staggered or batch shipment, every shipment and every shipment should be accompanied with a copy of the invoice. There should be a challan, and in the final consignment, there should be a original copy of the invoice. In case of this is the procedure of raising of the invoice in case of the staggered loss. So it has been certified that if a consignment of goods is accompanied with an invoice or any other specified document and an e-way bill, then the proceedings may not be initiated in the following situation. Spelling mistake in name of consignor or the consignee, but the GSTN, whichever is applicable, is correct. That means if there is a clerical mistake within the spelling of the name of the consignor or consignee, then the shipment should not be stopped, or any case cannot be initiated. Yes, but yes, if there is a mistake in the GSTN number, then there can be. So errors in the address of the consignee to the extent that the locality and the other details of the consignee are correct. Means minor error in the clerical error in giving the address is acceptable, but the locality and other details of the consignee address should be correct. They have just given a brief on the errors which are allowable, because of which a shipment or the consignment should not be stopped in between the way, or anything can be initiated under law. So error in 1 or 2 digits of the document number mentioned in the e-way bill, error in 1 or 2 digits of the vehicle number, error in 4 or 6 digits label of the SSN code. The first 2 digits of the SSN code are correct, and the rate of text mentioned should be correct. Means they have just given a slight liberty in this document that these can be allowed and nothing can be initiated. Error in the PIN code, but the address of the consignor and the consignee mentioned is correct. Subject to the condition that the error in the PIN code should not have the effect of increasing the validity period of the e-way bill. Because of the codes, because have you studied about the e-way bill? Have you studied about the e-way bill? Okay, because the validity of the e-way bill depends upon the distance. Okay, so with the PIN code, the distance can increase. If you have mentioned a wrong pin code, say in place of the pin code of MP, you have stated the pin code of Karnataka. Although there are huge differences, but because of one or two errors, that results in an increase in the distance, which results in an increase in the validity of the e-way bill period. Because of the basis of the distance, the validity of the e-way bill increases. So they are saying that subject to the conditions that the error in the pin code should not have effect on the increase in the validity period of the e-way bill. A penalty of 1,000 under GST Act will be levied in Form GSTR DRC 07 for every consignment which is incomplete or erroneous in above terms. Also, a record of all these consignments will have to be sent to the proper officer, to this controlling officer on a weekly basis. Means if there are any errors other than this, then a complete record, then the penalty of rupees 1,000 will be levied for every consignment, will be deposited against Form DRC 07, and the complete details should be given to the proper officer on the weekly basis if there are any errors related to the above. Clear, Varun, Harshita, and others? So with this, in this chapter, we have just gone through the text invoice, debit note, credit note, and the contents related in all these documents, and the payment advice, the receipt advice. So, and related errors and the penalties. So with this, your chapter which is covering about the text invoice, debit, credit notes, and the documents required under GST gets completed. So in the next class, we will start with this accounts and records under GST. This will relate, apart from the text invoice and debit note and credit note, there are certain other documents that are required to be maintained by any manufacturer or the supply of services that we are going to study in the next class. Is that okay with all? Okay, thank you students. If still there is any doubt, we can discuss in the coming class. Please give a reading to this chapter and we will take doubts in the next class. Okay, so we'll be just closing this today's meeting. Thank you so much for your time.